This is the Simplify Market Neutral Equity Long Short ETF, ticker symbol EQLS. EQLS seeks to provide positive absolute returns and income. First, let's take a look at EQLS's structure. It's comprised of approximately 200% long exposure to global equities, plus approximately 200% short exposure to global equities, resulting in about 0% net exposure. Unlike a fund with a positive net exposure to stocks, the returns of the fund will not come from a directional move of the global stock market, but instead be derived from the stock selection process. The strategy's machine learning stock selection model was developed by an industry-leading quantitative research firm. It begins with an investment universe of the approximately 1,500 stocks in the MSCI World Index, an index of global developed market equities. Hard-to-borrow names are removed from the universe before the machine learning algorithm is applied. The algorithm utilizes more than 500 inputs to derive a ranking of stocks with the highest and lowest expected returns.
About 300 of the highest ranked stocks are selected as longs, and 300 of the lowest ranked stocks are selected as shorts.
The fund is market neutral, that is, has approximately 0% net exposure to equity beta, size, or country. The fund will rebalance monthly. The fund will apply a few constraints. The maximum trade must be less than 2.5% of a stock's average daily volume. Maximum gross exposure to a single stock is 2% of the fund's assets. There are 4 underlying models within the algorithm. The short-term model utilizes data from the prior month. The medium-term model utilizes trailing 12-month data. The seasonal model looks at the trailing 10 years of seasonal data. Lastly, the hedging model is applied to periods when the first 3 models have historically performed poorly. In addition to the 4 underlying models, the fund will apply a dynamic risk management process to mitigate drawdowns. When the gross exposure is 400% and the fund reaches a 6% drawdown, gross exposure will be reduced to 200%. At 200% gross exposure, a 3% drawdown would result in a reduction of gross exposure to 100%. At 100%, a 1.5% drawdown reduces the gross exposure to 50%. The previous exposure will be restored after 5 days of cumulative positive performance. Let's look at an example of how this works. The fund starts with an approximate exposure of 200% long and 200% short. The fund has a 6% drawdown, which reduces the exposure to 100% long and 100% short. The fund then experiences another 3% drawdown, which reduces the exposure again to 50% long and 50% short. After this, the fund has a 5-day period with positive cumulative returns. This brings the exposure back to the prior level, which was 100% long and 100% short. After another period of positive 5-day returns, the fund goes back again to its prior level of 200% long and 200% short. The goal for this process is to reduce the absolute level of drawdowns. What is the use case for adding EQLS to a portfolio? The most important use for the fund is its potential for positive returns in up, down, or sideways equity markets. The direction of the stock market does not influence the fund's returns. With 0% net equity exposure, the fund should exhibit low correlation with equities, adding to its diversification benefits. We can quantify the diversification benefits by looking at the historical correlation between the HFRI-EH Equity Market Neutral Index and index of leading market neutral hedge funds. The Market Neutral Index has only a 0.286 correlation with the MSCI World Index and a 0.007 correlation with the Bloomberg Aggregate Bond Index. While the correlation with stock is low, keep in mind that the index includes strategies that are net long stocks. Since EQLS has an approximate net zero exposure, it's possible that its correlation would be even lower. Here is the historical maximum drawdown of the HFRIEH Equity Market Neutral Index compared to the MSCI World Index. During the dot-com bust bear market of 2000 to 2002, the Market Neutral Index had a 2% max drawdown compared to a 47% drawdown for global stocks. During the global financial crisis, the Market Neutral Index had an 8% drawdown versus 46% for global stocks. 2020's Q1 COVID decline saw a 3% drawdown compared to 21% for global stocks. And finally, during the inflationary bear market in the first half of 2022, the market neutral decline was 1% versus 21% for global stocks. How can investors make room for EQLS in a portfolio? Simply choose a desired allocation to EQLS, then allocate the remainder of the portfolio in its original proportions. For example, if the investor started with a portfolio of 60% stocks and 40% bonds and chose a 10% allocation to EQLS, the remaining 90% of the portfolio would be allocated in the original 60-40 proportions, bringing the final allocation to 54% stocks, 36% bonds, and 10% EQLS. Let's do some Q&A. How much discretion will the portfolio managers have in managing the fund? The portfolio managers will follow the algorithm's allocation without intervention, regardless of their personal feelings about any particular stock. Does the algorithm have any set biases, such as value versus growth, large cap versus small cap, etc.? No, there are no pre-selected investment biases built into the algorithm. Instead, the algorithm is fed the data and then trained to determine the factors most likely to lead to outperformance. Is there a best or worst market environment for the strategy? On an absolute return basis, no. On a relative return basis, the strategy has the best opportunity to outperform long-only equities during periods of stock market drawdowns. The prospectus mentions income as an investment objective. How will the fund generate income, and what is the fund's tax treatment? The strategy rebalances monthly. Any realized gains that the strategy generates will be passed along to shareholders periodically and be treated as ordinary income. Does the fund have any lockup periods, redemption gates, or K1 tax forms? No, EQLS is an ETF tradable during open market hours, and like all Simplify ETFs, will issue a 1099 form. Thanks for watching this presentation. To find out more about this or any other Simplify ETF, please go to simplify.us. We'd love to speak with you directly, so from the homepage, if you click the Contact Us link, you can make an appointment to speak with one of our representatives. We look forward to speaking with you.